Hey boys and girls, time for another weekly review. And this week ended. We have a red week after a long while, like the first one in the last five. And it's an inside week, so not really telling us anything big, and not the big bearish drop where we were really wanting. And now things are probably kind of bullish. I'll explain why and what. Uh, some conflicting information as well, like almost every time. Mostly because VIX is at the lows. It made new lows this week. Friday was a green day, but still an inside day as well. And in the past couple of weeks, we've also had vol up, market up. For example, on the 12th, VIX was up 8%, and on the 12th, we had plus 0.9 on SPX. We had 1.7 on QQQ, and so on. So even though VIX is down and we maybe get a pump up, I don't think we're out of that vol up, market up environment. And even if we get a VIX spike, the market might actually go up and still not get us a drop. Aside from that, inside week is consolidation, and consolidation without a breakdown is pointing toward continuation. This is the weekly range for this week: highs, mid, and low. And looking at the higher time frame ranges as well, we have the June range, which we didn't even hit the mid level, so it's even that bullish. We have the quarterly range, which we are around midpoint between the mid level and the high level. Actually, let's measure it. This might actually be a thing. Didn't notice earlier. Let's bring this to kind of this. Yeah, we're just below the midpoint of this range. And this week was the maximum window of weakness possible. We got a drop, but not that big. We got IV crushed, which fucked both puts and calls, and not a great place. For example, I bought a part of my position on SPY at four, just below 440, like around here, 449 something, like let's say here, and I paid 7.5 ish for September 430 puts, and those same puts, because of the IV crush, when SPY was around 445, were break even. I got out yesterday most of my position. Uh, the SPY position was slightly up. The Q's position was down. Had to take the loss there and cut it, but it is what it is. What live to fight another day, basically. So, and most of my money was on the SPY position, not on the QQQ. The QQQ was like 5%. Everything else was SPY. So, getting back to this, I think the chances are that we go up. We have the Russian military news, like they're doing a coup thing, which is likely to be bullish for the market. These kind of things either play out immediately, like very quickly, or they take months at least to play out. So the fast version is either Prigozhin gets killed, or Prigozhin succeeds in some way, and this is bullish uh, for the Ukraine war ending. And if it doesn't end immediately, like this becomes a prolonged civil war in Russia or something like that, again, they won't have resources to dedicate towards also fighting the war in Ukraine and fighting like a civil war. So short term, uh, there will be some shakeup. Everything is probably going to be interpreted as bullish by the market, in the hope that the war will end, and that's one thing. Then Cem also covered part of his shorts yesterday, and he probably knows what he's doing. And that's kind of it. So we have a situation where while possibly we could go lower, the lower isn't a lot lower. The lower is like 430, slightly below 440. I drew this on US 500 yesterday and posted on VTARS. Like if we don't take out this range and go lower very soon, it's more likely that we will go up. And even if you look at this, it's bullish divergence on 1 hour, on 4 hour. Well, this is just a backtest of we broke out. Now we're backtesting it, and we can go up. If we draw ranges on it, this is like the mid range, maybe a bit higher. Yeah, this lows here, this high here, this high here, this high here. And we can say that this is the low of the range, with the overshoot range being this small thing here. And then when we go up, we just double it, and just I'm gonna eyeball it. Probably around here is the high of the range, and this was a very large overshoot. So even in the chop scenario, we are at the lows of the range, and we should be going higher, not lower. So we are at the lows of the range, then we go like this, we recapture it, maybe we go, the minimum we see is the mid range, but most likely we keep going up and retest the highs, maybe make a new high, even like this. So this is kind of my expectation for next week because of all of these reasons. There's also, I wanted to share this chart with VIX seasonality from Callum Thomas, and the lows for VIX should be in July/August, sometime in that time frame. I also did a couple of overlayer shenanigans. So my base case for our current setup is that we will be getting, this is still a bear market rally, even though it looks like a bull market. Uh, we will be getting a repeat of this. And initially, I thought we were close to the end, but that is not the case. So the next base assumption is that we just had this leg here, and if you look at it, it's pretty similar in size. Because of that, I did a bit of overlayer magic, and let's hide some other stuff as well. The Q high we don't care about anymore. This ones I will leave on, and the new overlayer is based on that. And this kind of fits with what I expect. Like make a new high, maybe 445, maybe 450, something like that, and then we have a larger pullback. And the larger pullback is just a natural way of the wave structures of things. Is like we cannot keep going up forever without a more substantial pullback to gather energy. It's like bouncing a basketball on the tarmac, and if you keep applying pressure to it and pushing it down, it bounces a lot, like back to your hand. But if you leave it to bounce naturally, it will eventually bounce smaller and smaller, and then stop on the ground. The same principle applies here, like in which basically each wave of buyers, it's your hand pushing down the basketball each time it bounces up. But those there is such a thing as buyer's exhaustion or seller's exhaustion, and when we get these kinds of moves without consolidation, like this is consolidation here and accumulation basically, and it brought us the next wave up, but we cannot have this small a small consolidation, then another leg as high as this, another small consolidation, and another leg as high as this, and so on. So we cannot go much higher without a larger pullback, and to go even higher we need a larger pullback to get together to find buyers again. And this is like what I think is likely to happen in the future. I also did it for all no, this was the old one, which is obviously wrong. The new one is this, and new highs for Qs early July, then a pullback to the trend line, then Qs starts underperforming, and we have DIA taking over. So for the immediate future, DIA is likely to underperform. I don't think we get this drop here, but a drop down to small rally, then drop again, then go back here, and DIA starts overperforming. And IWM looks the strangest, although it lines up pretty well for now. And it's this actually. I think it was like this. Yeah, something like this. And all of this is kind of supported by volume and positioning. I'll look at it in a second for everything, especially IWM dropping. Let's get back to SPY for a second. Another thing I wanted to talk about, just to further emphasize this type of move, is the echo of a large swing. So, for example, both when we go up and when we go down, reversals tend to be double bottomish or double topish, and they are not exactly uh, to the line double top or double bottom. It can be lower high or higher high even, but in general they play out like this. And I'll show a couple of ones, and I'll do the inverted version because it's easier to get. So first of all, we had the June low for last year, and it was a lower high version, quote unquote lower high. So we go down, we pull back, then we go up again and do the blow off move, so to say. Then we drop, we pull back, and fail to make new highs. We even try to make new highs twice, and then we have the breakdown. Uh, this was the lower high version. In October, we had the higher high version. So we peak around September end of quarter, then we go even lower slash higher at October OPEX, and then we have this rejection candle, and if we it's rejection candle because it's green in this case. We have this large rejection candle telling us that we get a rejection, and then it goes the other way completely. And it's also uh, pretty easy to see on tops as well. Like we move up, we try to go higher, and this is where we are now. Like we had this top here, which is the equivalent of the OPEX top. Then if we don't have a large OPEX, a large pullback, and we try to go even higher, it is very, very likely that we will get a rejection slightly higher or slightly lower than the previous top. And then we get a large pullback, which we get finds buyers at this level. In our case, that level is, let's say, 420-ish. So the equivalent of that move would be, sorry, approximately this. It can be a bit higher, like it shows here. Doesn't really matter that much. We'll see when we get to that. And then only then can it go higher, and even then it barely makes a new high, and then we get a big rejection that takes us all the way down. And this is not uncommon. Most of the moves happen like this. Like for example, let's say let's look at here, constant uptrend, many small pullbacks that don't lead to a big drop, and when the drop finally comes, it's a big one, because this is unsustainable. Like it can only go on for a short amount of time, or not so short, but it can only go on for a couple of months at max, and we are already in our case into that couple of months. So for our case, I expect something like this, especially for Qs. Qs should look exactly like this big candle at some point that gets rejected. And target is like 380 based on this correlation. What do we have as 380? We have this low here. So this kind of, no, this is 390. So this would be the absolute top. we have this here. This range here would be the target between the low side of this, which is around this, and the high side of it. This is our target, 379 to 382, as the blow-off move, where I think is a very good short. And this type of, like, we tried to short here, it didn't work out that well. But this type of short, when the blow-off move happens, is the best type of short. Even regardless of what happens here, we will get a substantial pullback at that point. Again, this is correlation, not an attempt at the overlayer, but it doesn't mean it plays out like this, but exactly. But the TH checks out, and it's very likely for the pattern to look similar to that. Okay, so let's look at volume data. First of all, we look at put to call volume. It's quite bullish for SPY. Like the next couple of weeks, we only get more put volume than call volume for the end of the month for next week. This shouldn't be here anymore, so it's gonna disappear. But you get the idea. And the first time we get a more substantial put to call ratio for volume is July, and if this is quite small, like we want to see 3-4 prints on the put to call volume for it to actually be bearish, something like this. But this is very small. We don't care too far in the future. When we look at what happened for the volume, nothing really stands out. I would say this is bullish, considering we had a big red day and we get this kind of volume pattern. This is quite bullish. On Qs, it's a bit more bearish, or it was for Friday. Other than that, nothing really out of the ordinary. When it starts to look dicey is for IWM. So IWM looks quite bearish on the volume pattern, and excluding like a short-term bounce that we might get, because the whole market should bounce on a move on the Russian news. This doesn't look very promising, and it can do something like this even if it goes up. And we have this rejection here. uh, not too bullish on IWM with the way things stand here. And I'll talk about it when I do the ETFs, but you will learn why soon. Then we have DIA, and DIA is looking quite okay for volume. We can disregard the blue ones because it's short term and we don't care. I mean, it's expired on Friday, but we have this big print at 354 for July. We have this big print for 368 for September. DI is looking quite good, excluding what happened on Friday. So I kind of expect the DI to start performing based on these patterns. We get the blow off top move for SPY and Qs in early July, like first half of July. Then DIA starts outperforming and going much higher, while IWM still kind of sucks. And the reckoning comes towards September OPEX. So August, September will be the reckoning. Until then, probably bullish or sideways movement. Okay. So for now, I'll stop here. Moving forward, I will try to do more videos as opposed to longer videos with more stuff in them. Right now, I will stop with the indexes here, and then I'll continue with ETFs, mega caps, and some individual names in a different video. Have a good day. Bye bye.